Hello, everybody, and thank you for joining me today. It's Allan Laboucan with the Rocks and Stocks News Show. We have one of our sponsors on today in Meridian Mining. Meridian is one of my highest conviction development companies. And the reason for that is that they've done a PEA that is quite exceptional in that it has a very high internal rate of return and a low capex to bring it into production, and a very rapid payback of the capital cost to bring it into production. And that makes it a very rare company in the development stage. And this is why I consider it one of my highest conviction development stories. And recently they had some news out about geophysics that were run on their Santa Elena deposit that makes up two key deposits on the project. And some very good information in that news release. And I wanted to have their CEO, Gilbert Clark, on to talk about that. Gilbert, thank you very much for joining us today.
Yeah, thank you, Allan. Very happy to be back onto the podcast today.
Okay, so why don't we get right into this geophysical work, because I saw some quite exceptional stuff there, and why don't you discuss or let us know what you think about those that geophysics?
Thanks, Allan. Yeah, it's very interesting for us because, of course, we own our own equipment, so we don't have contractual costs to get this work done. But what's important with geophysics, I think many mining companies have been out there and they've been chasing their tail on geophysical anomalies. But what we had at St. Helena is a known extent of mineralization, a known massive sulfides. And through our own work, we've now discovered another high-grade lens to that existing ore body. So what we looked at when we went through our geophysical program was we'll start from the west and move across. We're progressively moving to the east along the body, along the deposit. And what was very interesting is that we drilled through a zone that I think went sort of 9.5 meters, about 1.8 grams gold equivalent sulfide hosted. And we ran the borehole tool, the downhole borehole tool, and we got a conductor right where expected to occur. And it also then, that conductor projected down dip through other historical intercepts of copper, gold, silver, zinc mineralization. And it continued some 170 meters down dip, and it's 100 meters by extent. And why we found that very interesting is because in December of last year, we put together this exploration target that had sort of 3.5 to 7 million tons, anywhere from 3 to 3, I think it's 3.2 grams gold, which gave us an upside target, exploration target of approximately 760,000 ounces of gold equivalent. And when we say equivalent, Allan, we always talk about post-metallurgical recovery. And this lens, this that we intercepted with the drilling, when we actually surveyed it, created that plate, and that plate actually went down dip past the old mine workings and actually past the extent of the exploration target, because they very much concentrated their drilling on that narrow massive sulfide bottle. We've actually seen that the extent of the mineralization is a lot larger. So that's very important, because for me, it sort of gives us that confirmation that the range of our exploration target is very strong. And also, it gives us great confidence that we should be able to arrive at that upper tonnage limit of approaching 7 million tons for an open pit. Now, this is the second open pit that we're developing, open pittable resource that we're developing at Cabrasal, and that will feed into the central, what gives us the optionality really to feed this into this central Cabrasal mill, which is associated with the Cabrasal deposit. So very interesting time for us.
I had a mentor in geophysics, and he was the world exploration manager for Anglo. And he had a saying that sometimes the magic works and sometimes the magic doesn't work when referring to geophysics. And one thing that you sort of have to determine is first, what is the survey that's going to best pick up the mineralization? And then try to confirm with the drilling that geophysical survey is in fact picking up the mineralization that you're looking for. And so I would say that the magic's working here for you guys,
Yeah, look, it's very handy to have an existing deposit
right?
because often, when you drill geophysical anomalies, you can hit barren, just pyrite, some sort of, or pardon me, a carbonaceous shale or graphite. But when we're actually drilling into no mineralization, which we've actually, as we said, is we now sort of define this high grade lens, an additional high grade lens, and then we run the geophysics and we see that the response from the geophysics directly corresponds with the actual mineralization, and we trace this mineralization over plus 1.1 kilometers, and even further than that. It means it's very confident for us in that exploration targeting and the resource building to and I've said this right from the very start of the investment in Cavasal is we don't take risk, okay, and we've set a conservative target on Saint Helena, and I think we're going to achieve that conservative target, and through the combination just not of um, borehole EM. We're also doing induced polarization. We're also doing mesolar mass. So we're putting a whole suite of geophysical tools onto this project to really define where we drill next and how far we can grow this deposit.
Yeah, because the geophysics that have been done in the past actually extend quite far beyond the beyond what's been drilled in the past and the drilling that you guys have done. Is that correct?
Well, the original geophysics was quite limited. It's the geophysics that we've done in the last 6 months that's really taken it from being a very prospective 1100-meter sulfide deposit to over 3 kilometers now of very prospective horizon, and it's conductive. We see it gives a conductive response. We see that from the IP and now the EM. And another rewarding aspect of this is as we've been drilling this deposit out, the edges of the sulfides, they're aligning very neatly with the edges of the IP anomaly, and that doesn't tend to happen. I think we've all seen a lot of companies promote that we have this geophysical target, and 95% of the time it remains a target. What we're doing at St Helena is building hard asset value from a known deposit without having taken the risk of, is there anything there? And this is so important for the long-term economics, because when I look to incorporate this into the future of the belt, St Helena might be 10% of the tonnage and say, I don't know, 3 times the grade. But if this was that was the only prospect you had on the belt, well, you can never develop it into production. But because we see the standalone economics of Cavasal, we actually now know this will be part of a belt scale to development. And our economics of Cavasal are very much focused on that. It's a very fantastic first couple of years. Okay, we go over, I think the PA was 200,000 tons, sorry, 200,000 ounces, and it continues for some 4 or 5 years down to about 100,000 ounces. In the PFS, we're increasing the throughput so that the life of mine will be over 120,000 ounces of gold equivalent. Now, when you already strong economics, if you then put in, 500,000 or 700,000 ounces of gold equivalent into 2 or 3 years of production at Cavasal, it makes a tremendous change to the economics. And I mean, a really positive economic change. And the only additional part of the flow sheet that I can see will be the addition of a zinc circuit, because there is more zinc at St Helena. But that also means the peripheral zinc mineralization at Cavasal, which we have not included in the economics because we did not have a zinc circuit, we can now pull that, also potentially pull that into the economics of Cabasal. So the upside that we're producing now, in real time, with hard assets, is just getting stronger and more certain throughout this year. It's like you can, people sort of bandy around the word company maker, but all I can say about the Cabasal belt is you're seeing day by day the emergence of a mid-tier producer, or a future mid-tier producer. That's what we're aiming for. But if only the general equity markets were kinder to all resource stocks, I think it'd be better. But I think the opportunity, I don't know about you, Alan, but the opportunity that our equities are presenting now, I think on the PEA, we're trading at about 0.075 to NAV. And I expect the economics to improve with the PFS. Now, then when I factor in what I think potential contribution is to St. Helena in the same respect to a potential feasibility study later in the day, our equities are trading a ridiculous small percentage to the future NAV, which we're actually seeing being developed in real time today.
For me,
amazing opportunity.
I look at it in comparison to other, first of all, in the development window, I don't think that the industry has enough companies in the development window. So then when you look at the companies that are in the development window, most of them have CapEx costs well over $1 billion, up to $5 billion. They don't have that low CapEx to put it into production, making this project quite unique. Then, because of the grade and the low cost, you've got a very high IRR, which is very unusual. To be close to 60% IRR is peer leading, without any exaggeration. And that makes it a quick payback of the CapEx to bring it into production. So if I put that criteria on others, it's really hard to find another that has those metrics.
I'd actually say, Alan, if you were to put, let's go back to 1914 when they first started drilling out, bringing production Flin Flon, or prior to that when they were doing the rollout of Sudbury. And we could look at things like the Reed, the volcanics in Tasmania, or any of the metallogenic belts. I would say you could draw a comparison to those past economics because they were developing high-grade dirt, open pits, simple milling at the start. And what we're seeing now is maturity in these belts. And this is why you see these high CapEx numbers, because they've got to develop underground mines 1,000 meters deep. And, for us to be in the near term
with
possibility.
Very low IRR.
Yeah. Oh, terrible. They need strong, consistent, long-term commodity prices just to justify what they're doing, which is always very risky. And the other thing for us, being a future copper, gold, silver concentrate producer, and this is how we commercialize, how we're envisaging commercializing Cabasal and St. Helena. I had a chat recently with a large smelter group, and they were talking about the availability of clean concentrates like it Cabasal is going to produce. And I said, the market's changing. And they said, yes. When it last changed, they lost a contract. I think it was about 300,000 tons of concentrate with a very large, one of the majors. And I asked them, how did you recover that 300,000 tons a year of concentrate? And they said, we had to find 30 or 34 additional mines and suppliers so we could fulfill our needs for copper concentrate. Now, in today, as you said, the rollout of projects today in the near term, there's not 30 copper mines coming out in real term. The one that I'm absolutely convinced on is Cabasal will go into production in the near term. Our economics just show. And we will have incredibly clean copper concentrates. We can adjust our flow sheet to make them high sulfur or high fuel copper concentrates, so that other people that have dirty or low fuel concentrates, these can be blended. But it really puts us into the driving seat going forward of how we commercialize the future concentrates from Cabasal. We are, I keep telling a lot of people in the industry, and I get feedback from the industry, we are going to see some large changes in the availability of copper concentrates in Q3 and Q4 this year.
You know, as you were describing that, something popped into my mind. I wanted to ask you is, that sounds like there's a possibility that there could be offtake agreements, as a potential, for development. Is that out of left field there, or is it something that is a possibility?
Look, there's when you have when we've tested and produced results, when you have producing 28% copper concentrate with 33% sulfur, half ounce gold, 3 ounces of silver, and you can actually increase the sulfur content if you choose to, it is an incredibly desirable offtake to have secured. But the world has changed for the smelter groups and the traders. And quite frankly, if these groups ever conceive of offtake, there's a golden rule now when you're holding all the gold is if you don't have equity, you don't have offtake. So that's the rule. And I encourage all copper companies, the junior emerging groups, if you have good copper concentrates, they want offtake. They're not going to partake in the development of the project. They don't get the offtake. You can deal direct with smelter groups, but again, those smelter groups, there's the Chinese smelter groups will suck up as much concentrate as they can get, and they're much less averse to equity. It's the time now of the Western and the emerging copper groups. We're seeing some really clever stuff coming out of out of the Saudi Arabian kingdom. I mean, that's where the growth is going to be. These groups, these historical smelter groups, now must work with the copper companies to secure their supply. The big one is I spoke about it recently on Twitter, is the changes in the concentrate market that's occurring in Indonesia when that big smelter comes online. And it will soak up an amazing amount of copper concentrate that usually is exported. We can never replace that Cabasal, but what Cabasal, the project, can do is provide that is very clean, high fuel, non-punitive. There's no detrimental elements in this, but we can provide quite a reasonable amount of concentrate to be used as either direct feed or blending to the other dirty or the low fuel. We're seeing a lot of low fuel copper concentrates coming out of Chile now. I think they announced by Escondida where they said they're only going to maintain their DMTs, but the content of copper and sulfur will diminish. And then you look at that marvelous copper mine over in the Congo that Mr. Freeland brought online. I mean, that is a fantastic ore body. Gosh almighty. But it's low sulfur. It needs fuel. So there's an opportunity here for Cabasal to contribute in a very niche way. And this is the great attraction, niche, clean product, incredibly low capex, incredibly low OpEx, and trading today at a NAV valuation that makes no sense. And I think maybe we're looking at, I think we're going to see some recalibration in the market. I think that, I don't know about Allan, if you speak to other people or what my shareholders can talk about, but certainly some of the flavor of the month commodities, be that lithium or rare earths aren't rare, or the uranium space. I think the uranium space, the cheap tickets have gone. I think we're seeing the lithium space cool dramatically, but the gold and the base metals, the consistent performers,
You need
not
that
performing well, but they never go away. There's never that dramatic falling off the cliff. So I think where Meridian sits today is a very niche opportunity for real equity growth for incoming or existing investors.
that copper is crucial, and you've got the kind of the perfect mix. You've got, I think there's a pretty significant change happening in the world order, if you will, of economics, that a lot of these countries have to go back to somewhat of a gold standard. We're seeing that in the BRIC nations. And so you've got kind of the best of the both worlds. You've got the metal that's needed for to go towards the gold standard, which, we could talk a lot about the world problems in debt and why this is forcing a new gold standard. But then you've got copper that the needs of that are for everything. Nothing works without copper. And so it's a very good mix. And again, all of these, whether you're talking about the copper and the gold or the concentrate folks, the reason that there's a low capex is because this is not a complex metallurgical process to get the metals out of the ground. If it was, you'd be looking at $1 billion, $2 billion to build it. And Gilbert is always talking about that clean concentrate and the metallurgy, and however you slice it with Meridian, it all comes back to how special this project is.
Yeah, we communicate quickly and often with our, to any inquiries from our shareholders when they talk about Cabasal, and actually educating and demonstrating the importance of metallurgy and how that actually affects your capex and your opex is crucial. But then, Allan, when I look to the year ahead, people said, "Look, what are you going to deliver? Where's the growth?" And I'm going, well, we're looking at potentially be somewhere between, I think it's 3.5 to 700, 350 to 700,000 ounces of gold equivalent metal coming into the value of the company in a short time. We're going to be advancing the PFS, and that'll be in Q3, touch wood, Q3 of this year. Now, then I look at the near term. December and January in Brazil are always quiet months. Just everything winds down, and it takes time to come back up to full speed. So we expect to be producing and releasing results in the near term for people to look at. But it's hard, I like a lot of people, what is the trade? Well, there's probably 1,000 trades out on the TSXV and the TSX, and they're trades. But there's only a thimble full of investment companies out there. Investment companies, hard assets. And I think this is why we've attracted this very share registry is made up of some wonderful sort of small investors, some high net worth, and some incredibly large funds that are actually saying, look, we see you as a near-term producer. We want Latin America copper exposure in a safe jurisdiction, and all these things are coming together, and it's very positive for us. Unfortunately, there is sentiment in the market, but this is, people often say, "Oh, is this the bottom? Do I wait?" Well, I'm just saying, look at the economics. You're buying an asset of, like I said, 0.07 to NAV. As we go through PFS, and if you go through feasibility study, then into production, you're going to see, from 0.07, you expect to go up to somewhere around 0.75, 0.8 now. So tell me, where does the assets? There are trades where you can go up and down. They're trade.
Well, Gilbert, there's another thing that a lot of people look at what's happening today in evaluation of a company. But I kind of look at things on a bigger picture, and I use the Lausanne curve quite a lot, because not so much for its precision as to how to value a company, but to look at it as a food chain. And you have not enough companies making discoveries in that left side of the Lausanne curve, not enough companies in the development window of the Lausanne curve, not enough new producers and mid-tiers. And then even when you look at the majors, they have significant issues because they've not put enough money into exploration for a long time. And so I remember years ago when De Beers Canada wanted to be considered as the partner of choice for smaller companies doing exploration in Canada. And this has come to mind lately because I think that I've seen some junior friendly deals with the majors. And I think what they're recognizing is the reality of that food chain, that there needs to be more smaller producers that could grow into mid tiers. There needs to be more mid tiers. There needs to be more development. There needs to be more exploration. And I'm starting to see those big companies putting money in at attractive terms to those smaller companies. And I'm wondering what your thinking on that is that I think that a lot of these majors have to become the partner of choice for the minor leagues of the mining business. And the minor leagues the need to be stronger in order to help the major league, which is the major miners. What do you think of those thoughts?
Well, very much we are seeing the engagement by the industry to finance the industry. We are seeing that. We've seen that a number of times, a number of investments. Very curious investments in that manner, and some positive ones. But at the same time, Allan, when we did our raising last year, the groups that came into the share registry, people just said, well, these guys typically they need 100 million plus market cap. They need high liquidity to achieve. Just look at this. But what we've been presenting all the way along is hard asset growth in near term for the development of Cabasal. So there is that very present. The industry is financing the industry at the moment because it's companies have
So
found
you're
it
talking
incredibly
about
challenging to find equity.
institutions that in the past would not, you were, let's say, too small. Those institutions, it sounds like they're having they don't have a big menu of opportunities such as yours.
No, there is not the deal flow for the large institutions to find low risk assets and near term production with and we have a proven record of operating in Brazil. So that's a key aspect for it. And we had them on our share registry where they've said, okay, we actually understand what you're doing, and you're in the growth where we see your growth potential to be meets our our current requirements of minimum cap size, because they want companies that are going to grow up to the 10, 20, 45 times baggers. And what I see at Cabasal is we're trading at this ridiculous price to NAV, driven largely by a sentiment, while at the same time the economic facts and the advancement of permitting are a complete opposite to the sentiment. So this is the unique opportunity that Meridian finds. You say, where am I going to invest my client's money? Where am I going to invest my personal money into an asset on the TSX? Because there has been some spectacular failures just recently and disappointments, and there's been groups that have promoted a pig with lipstick. But what we had with Cabasal is the near term, where we see to be the near term potential production asset, and it's based just on hard engineering fact, geological excellence. We just need these markets to change. But I think,
well, when you're describing, Gilbert, the actions that you're talking about with the institutions and the actions of the majors are at a very big disconnect between what the retail or the generalist investors are how they're acting compared to those those institutions and majors that have a lot more data than the generalist and the retail, and they're sort of sending a message that, hey, we can't find what we want. There's just not a lot. There's not a big menu out there, folks.
well, The observation I give on that aspect, Alan, is a lot of the majors, good companies, mid-tiers, great companies, a lot of them are managing a yield for their shareholders. And the only unfortunate aspect of that is we're a consuming industry. We consume. So they produce yield, they produce cash flow. And mining industry distributes incredible dividends. But at the same time, you have to look at the future equity value. And if you don't replace your resources, and so you've got future resources, because all these companies have large closure liabilities coming to them now, because these belts are largely exhausted. Now, we at Cabasal have got none of those liabilities that can be used to discount our value. We've got nothing but in our current PA, decades of net free cash flow. So we are the growth story in the industry. And this is the opportunity we keep presenting to our investors. And this we see some small day trading, but no significant volume. Any investors that we have in our share registry, they contact us, we inform them, we educate them, and they can understand the desirability for this project to go forward and for the company to grow. So we're very convinced on the state of the commodity markets. Gold is still trading like a currency, not a commodity, and that will continue for a while. But the copper market has gone a dramatic shift,
You touched on
and the
something.
industry's got to catch up.
You touched on something there that I think is another argument of why I think majors need to be the partner of choice. Is that yes, they are generating good cash flow, free cash flow, and yes, they are able to buy back their stocks and pay dividends, but their stocks are Barrick and others had a bottom in October, had a nice run to the end of the year, and now they've given back all those gains. And what that tells me is that they're not being rewarded for free cash flow and paying dividends and paying buying back stock. That's not what their investors, their institutional investors want. They want growth. And that's another reason that I think they have to come down the food chain and help out the minor leagues to help create things that could fit into their growth plans.
Well, in 2024, Alan, I'm not going to wait for the majors. We're just going to keep going forward.
Perfect. Good note to end it on. I know you have to run on to another meeting. I'll close it up. Gilbert, thanks a lot for
Thanks, Alan.
coming on again, and I look forward to seeing you at the PDAC.
Absolutely. Okay, Alan, thanks a lot. And if anyone's got a query, just please reach out to me and I'll on info@meridianmining.com.
Awesome. Thanks, Gilbert. Have a great day.
Thanks, Alan. Bye.
So there you go, folks. I think that I started saying that this is one of my highest conviction development projects that I can find out there. If you can find ones that have very low capex, high IRR, and fast payback, let me know, because I can't find them and I'm looking every single day. And what Gilbert was talking about there is that those institutions that may not have looked at a company like a Meridian in the past, they have to come down and look at things like this, because there's just not a lot of them out there. And these projects are much needed in the mining space. And so I'm very impressed with the economics of the project, but also the exploration potential. We talked today about just Santa Elena, which is part of two key deposits. All the economics have been run on the Cabasal portion of the deposit. And Santa Elena is like a satellite. And what's interesting about the satellite is that this satellite does not need to pass the economic hurdles of building its own plant, because that's being done at Cabasal, which has these great economic numbers on it. So this is like gravy. You just truck that up there, and it's gravy on something that's already going to be paid for by Cabasal. And then you look beyond that, they've focused only on two. These are VMS deposits, and they tend to form in clusters along belts. And they have the entire belt still open for exploration. So however you look at, even look at the country risk. Brazil is becoming one of the most important mining jurisdictions in not just South America, but maybe in the world. Every major mining company wants to be in Brazil because it's got the great geology, the good permitting, lots of people, well-trained mining people. These are issues that are crucial in the mining business. And so, you know, that's why I consider Meridian Mining one of my highest conviction development stories out there, because they're just hard to find, and when you find them, they don't have these kind of economics. So as always, my shows are for information purposes only. You need to speak with your financial advisors before making any investment decisions. Meridian is a sponsor of my work, which helps me provide content, not just to talk about Meridian, but the other work that I do in the to talk about the sector and other companies. And so keep that in mind. That's a bias of mine, but whether the company is a pick or a sponsor, they all have to fall through my filter that I've built up for 30 years. And I think I got a pretty good filter and a pretty good eye for good projects. And do your homework on Meridian, and I think you'll be equally as impressed as I am. Have a great day, and we'll talk to you soon.